In this video, I'm going to share with you the trading strategy that I invented that got me funded. I've called it momentum trading. And I've got funded over $600,000 in the last 90 days trading this exact system, but don't take my word for it. Here's a sneak peek of some of the incredible results that the exclusive members have achieved trading this exact system. You're going to get so much value. Let's dive in. Just for full transparency, here is my FTMO terminal. In front of you is a recent 100k FTMO challenge, and let's just run through the metrics. This challenge was started on February the 14th, 2025. It ended March the 27th, 2025. This was a 100k account. The account type was swing, which doesn't really matter. And you can see we've had a steady climb in our equity curve. The starting balance was $100,000. The ending balance was $110,120. Scrolling down slightly here, we traded for a minimum of 4 trading days. On this account, our max loss was $1,785, which was minus 1.78%. The max drawdown that we seen on this account was $1,847. And you can see here the profit target was achieved for $10,120. This is a profit target of 10%. And if we scroll further down, you can see these trades were primarily taken on gold and the US 500. Most of my winners were $2,000. Most of my losers were $1,000. This is because I use a mechanical 1 to 2 risk to reward. You can see right here, $6,777 come from the US 500 and $3,589 came from trading gold. Here is also my certificate of completion. And as you can see, this is the 27th of March. So now let's break down the strategy that I invented. And I just want to let you know this strategy is fully mechanical, it's fully defined, and it's fully rule-based. That means that there's no discretion involved when trading this strategy, which means that you do not have to rely on your own intuition. And so you can just follow the rules that I'm about to give you and you will become consistently profitable. Rule number 1 is we need a daily directional bias. All that simply means is, are we looking for longs or are we looking for shorts? The most mechanical way to do this is by using the 50, 100, and 200 exponential moving average. You can apply it to your chart by clicking the indicators tab at the top. It's this one right here, EMA 20, 50, 100, and 200 by Dr. Sweets. When you open up your indicator, you only need the bottom 3. When the 50 is greater than the 100, which is greater than the 200, this indicates that we are long bias on this market. All that means is that the trend is to the upside, and therefore the momentum is also to the upside. Step 2 is you need to be trading during a London or New York session. In general, there are 3 sessions. We have the Asian session, the London session, and the New York session. It's your job as a trader to make sure that you only trade during these high volume sessions. The reason why is because this is when the market is most likely to trend. You can see right now we are currently during the New York session. Rule number 3 is we need to see a run on liquidity. We have sell side liquidity below the London session low and also the Asia session low. This right here is your run on liquidity. If we zoom in here, you can see prices came below the London session low, and therefore what this will be doing is trapping traders thinking that this is a breakout and enticing them short within the market. Also, any early buyers from the London session, their stop losses will be below the London session low, and therefore they will also be getting stopped out. Rule number 4 is confirmation. This is simply a 15-minute bullish candle. You can see this is exactly what we get right here. Our entry is on the break of this bullish candle high, and step number 5 is invalidations in targets. Invalidation goes below the liquidity sweep, and we're simply targeting a mechanical 1 to 2 risk to reward. We're not looking for a home run here. We're just looking to take a small piece out of the market based on a high probability setup. We're triggered long in this trade right here, and as you can see, we start pushing into profit. And as you can see, during the New York session, this trade hits take profit for a 1 to 2 risk to reward. When we are triggered in this trade right here, there's no micromanaging with the momentum strategy. It's literally either stop loss is hit or take profit is hit. So it's very important that you don't get emotional, you don't micromanage, you don't close your trade early. And just before anyone thinks that I'm cherry picking these trades, here is the analysis that was sent ahead of time to the exclusive community. Here is the actual entry of this trade. And here is also execution proof from my FTMO dashboard. You can see this was the 27th of March. This was gold, 1.2 lot size for a profit of $1,863. You may ask, why wasn't it $2,000? It's because that's all I needed to pass this challenge right here. And so this right here is the momentum strategy that I have invented. This strategy has around a 50% win rate with a 1 to 2 risk to reward. So I'm here to tell you that you will lose 1 in 2 trades with this strategy, but I'm also here to tell you this is the reality of trading. The reason why you need to trade a mechanical strategy like the momentum strategy is because it's fully rule-based, it's fully defined, and it's fully mechanical. This means that you don't need to rely on discretionary trading, which means that you rely on your intuition and understanding of current market conditions instead of strict mechanical rules. And this is why it's so important to trade a mechanical system. This system takes all of the guesswork out of the market. It only requires 15 to 20 minutes of chart time each day, and it is a proven system with a data-backed edge. If you would like to learn more, then make sure to check out my one-on-one mentorship and exclusive community. The link is in the description down below. You can also personally connect with me via the free Discord community. The link's also in the description.